Hey everyone, welcome back to Corporate Decoder. Today, Lake Acquisition Corp, MLAC, just filed an 8K report detailing a significant merger vote, and I am seeing some interesting shareholder activity around it. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is moving forward with a big business combination, but a large number of shareholders decided to cash out before it happens. Alright, let's dive into this filing from Lake Acquisition Corp. Or MLAC, this report is all about a big meeting they held on the 4th of June 2026, where shareholders were asked to vote on a major business combination. Think of it as a crucial step before the company officially merges with another entity. Lake Acquisition Corp is a special type of company called a SPAC, which is a blank check company. They raise money through an initial public offering to find and merge with an existing private company. In this case, they are looking to merge with Avalanche Treasury Corporation, and the details of this merger are pretty complex. The main event at this meeting was the vote on the business combination proposal. This is basically the green light for MLAC to merge with Avalanche Treasury Corporation. The terms involve a series of mergers and transfers, including MLAC redomiciling from the Cayman Islands to Delaware. It is quite a mouthful, but the core idea is to combine these two companies and create a new entity that will be publicly traded. Now let's look at how the shareholders voted for the business combination proposal. A large majority voted in favor, with over 27 million shares voting yes. Only about 400,000 voted against it, and a small number abstained. This clearly shows that most shareholders were on board with the merger plan. Following closely was the merger proposal, which is essentially another vote to approve the specific merger that will happen as part of the business combination. Again, the voting results were overwhelmingly positive, mirroring the first proposal. This indicates strong shareholder support for the structural aspects of the deal. Then we have a set of proposals related to the company's structure and governance. These include approving the move from the Cayman Islands to Delaware, which is called Domestication. They also voted on the new company's authorized shares, the board of directors' composition, and how future meetings will be handled. One interesting detail here is the authorized capital stock. The new company, referred to as Pubco, will have a substantial number of shares authorized: 550 million Class A shares, 100 million Class B shares, and 50 million preferred shares. This sets the stage for future fundraising or share-based compensation. Next up, the Nasdaq proposal. This one is about getting shareholder approval for issuing new shares in connection with the business combination, as well as in relation to things like a company unit subscription, a contribution from a seller, and an incentive plan. The rules on Nasdaq sometimes require shareholder votes for these types of share issuances, especially if they dilute existing shareholders significantly. And finally, the director election proposal. 2 directors were up for election to the board. The voting results here show that a significant number of shares were voted for all nominations, indicating confidence in the proposed leadership for the period leading up to and potentially after the business combination. Now here is where things get really interesting. While the votes for the merger were strong, a massive number of shareholders decided to cash out their investment before the deal is finalized. They redeemed or effectively sold back over 22.8 million shares. This means a huge chunk of the money that was held in a trust account for these shareholders, around $243 million, is going to be paid out to them. After all these redemptions, the company will be left with a very small number of public shares outstanding, just over 153,000. This is a dramatic decrease from what it was before. It highlights that many investors were likely expecting the SPAC to merge and were either unhappy with the deal terms or simply wanted their money back. This level of redemption often happens in SPAC deals, and it can significantly impact the capitalization of the post-merger company. Think of it like a mass exodus out of a hotel before a big renovation starts. Those leaving want their deposit back. The filing also touches on an event that happened a few days before the meeting. Lake Acquisition Sponsor LLC, which is the sponsor of the SPAC, made a distribution of some of its assets. This included distributing over 2.7 million Class B ordinary shares of MLAC to its members. This is a common move for sponsors to distribute shares to their own investors or partners. After this distribution, the sponsor still holds a significant number of Class B shares, which usually have different voting rights than the Class A shares. It is important to note that these Class B shares are often held by insiders and have a different structure. The breakdown of who received shares, like Paul Greenberg, the chief executive officer, and others, shows how these shares were disseminated. Looking at this filing, it is clear that MLAC shareholders overwhelmingly approved the business combination. However, the massive redemptions are a very significant event. It means that while the company is moving forward with its merger, a substantial portion of its original public shareholders have opted out, taking a large amount of cash with them. This is typical in the SPAC world, where many investors put money in hoping for a quick profit and redeem their shares if the deal isn't to their liking or if market conditions change. Mountain Lake Acquisition Corp is definitely going ahead, but as a much smaller company in terms of public float, the risk the company faces now is operating with a significantly reduced cash balance after these redemptions, which could impact its future growth and ability to execute its business plan, especially if the merger partner Avalanche Treasury Corporation requires substantial capital. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.